GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the charts are greener than a Whole Foods kale aisle. I'm your host, Jay Hamilton. It's Monday, July the 14th. Bitcoin is at all-time highs. What's going on? What's coming next? And what is setting us up for the rest of the summer? AI is quietly changing the way crypto is traded. Today's guest is working a lot with quantitative trading models using AI, and we're going to talk about how AI is impacting their trades and also the quiet reason why institutions are suddenly buying crypto and what we can expect in terms of institutional adoption in the coming months. Before we jump in, I want to give you all a huge thank you, deep bow of gratitude because we hit 20,000 subs on YouTube just this past week, and I am so grateful for all of your support. We couldn't do this without you. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Definitive, the leading multi-chain trading terminal trusted by funds, DAOs, and pro traders. Today's guest is Michael Ashby. Michael serves as CEO and CIO of AlgoQuant, a global quantitative trading firm. Don't know what a quant trading firm is? Well, we're going to talk about that today. AlgoQuant runs a team that runs internal capital and allocates to external managers and is also building an asset managed unit in-house. Michael brings over 20 years of finance and trading experience to everything he does, and he's now fully focused on crypto and digital assets. Without further ado, Michael, welcome to the Milk Road Show.
Yeah, thanks, Jay. Nice to be here.
Pleasure to have you, and an exciting day to have you. That's for sure. Crypto's ripping. Like everything's ripping. Bitcoin's at all-time highs, but it's not just Bitcoin. All markets are green right now. What's your take? What's driving this right now? How do you feel about this current pump we're seeing in the markets?
Yeah, I'm excited as well. I think it's finally the market's woken up to digital assets. I think we had the ETF stuff going on, 12 months ago. And I think this is a little bit of a lagged response, right? Where, you know, everybody here was probably early. We're now getting the second iteration of people joining. So it's great to have some new people buying in.
When you see a pump like this, what do you look at to confirm that a rally like this has legs, or are we due for a correction?
So I think, speaking personally, I spent my career trading different assets. And you look at the volatility of these assets, and digital assets has been traditionally very volatile. But Bitcoin, the volatility is dampened. And again, since the ETF came out, and now we have the listed treasuries, it's creating a compression component. So think of it dampening volatility. It's actually probably a good thing long term because you're going to see a slower grind up, but less sort of big drops. That's not saying that we won't have one, but I do think you're seeing a sustained sort of push into the positive, which I think is great to see.
When you look at the flow of data and the trades that you see on your end, obviously you're working with a lot of institutions and a lot of bigger players. What are you seeing behind the scenes that, in terms of the trading activity, that might give you insight to the way the market is moving right now?
Yes, I think the so in traditional markets, you have a lot of alternative data. So Sam Walton at Walmart really revolutionized this. He used to fly around the car parks in a small plane and count the cars, right? So that's alternative data. It's nothing fancy. But if you look at the large hedge funds, traditional finance, they use a lot of this. In crypto, it's not really that interesting. Generally, the insights come from folks on stuff like this. If you guys are happy, the markets are happy. If you're not happy, the markets aren't happy. So it's more momentum driven and retail driven. And I think folks in the retail market are generally happy right now. That said, Bitcoin's become very dominant. So the folks that are true Bitcoin believers, I think they're happy right now. But if you look at sort of the spread, or what we call the delta in quant trading, which is the difference between the two, it's bigger and bigger, right? So I think I read yesterday or today that Bitcoin's now bigger than Amazon in terms of its value. But if you look at the market cap of some of the other tokens, it's also reducing. And what that means for us as quant traders is that liquidity is less in some of those other tokens. And so as a quant trading firm, we like to buy and sell quickly, and we do lots of trades. And if there's liquidity, it's easy for us. If there's not, it's difficult. And so what we're finding is that we used to be able to trade the top 500 tokens. Now we can trade the top 200 because that bottom token list is just becoming very illiquid. And so I do hope that Bitcoin continues to go up, but I also hope that liquidity comes back to more of the tokens, as it were.
Mm-hmm. It's a very
Mm.
interesting perspective because, as we've seen over the past, basically since the Bitcoin ETF and throughout this bull cycle, which our take has been that we're still in a bull cycle. It's just an extended bull cycle, a little bit different than the past cycles that we've had in 2017 and 2021. So I would love to. Is your view, just to frame your view, is your view when you look at the quantitative side, and we should actually, you know what, let me just pause for a second. Can you just quickly, most of our audience will know hedge funds, but they might not be so familiar with quant trading firms. What does a quant trading firm do? Can you explain that quickly so we can just level
Yeah,
set on that?
sure. Happy to. So a quantitative hedge fund, quant is short for quantitative, basically means that you're using computer models or algorithms to design your trades. So if you think of if you put a buy or sell order into your engine, that's a discretionary trade. You're deciding if you design an algorithm that says at Bitcoin goes to 120, I'm going to buy more. That's the algorithm. So we have a lot of algorithms that essentially decide when we're buying and selling. And so we have about 30 teams that do that around the world. So any one time they're buying and selling based on different algorithms action.
And uh, one more question around this, and then we'll come back to the state of the current market. Um, So when you say you're using algorithms to trade crypto, uh, what kind of algorithms or models are we talking about? Where's the edge within those?
Yeah, so it's a good question. So we our edge is to find very talented managers who come up with great ideas. Um, their edge is essentially looking at different ways of understanding the market and then putting it into algorithm. So, and this is not example of one of our algorithms, but I'm going to give you an example of a very common one in crypto hedge funds. And so if you can monitor the movement between cold and hot wallets, if a lot of crypto moves from cold wallet to hot wallet, it's a bear signal because people are getting ready to sell. And if every cold wallet to hot wallet, vice versa, right? So often when that happens, people have algorithms that will tell them to buy or sell depending on the signal. And then the art comes into how much and how long. And so different people have different ways of doing this. But that's a very common signal that goes into the market, is well known. And again, you can do anything. It doesn't really matter as long as it works. And so anybody can do this. It's the beauty of crypto. You know, your audience can definitely mess around with algorithms.
And how is you come from a background of traditional finance before you came into digital assets? How is quant trading with digital assets different from stocks and current FX trading and other more traditional markets?
Yeah, it's another good question. So there's definitely similarities. And what I would say is that one big difference is that the lack of alternative data. So again, it's much more of a momentum-driven market. The other difference is that it's just the market structure is very different. And so if you look in digital assets, you have big exchanges as well as large derivatives markets offshore. We have less, I guess, less flow in the U.S. than we do offshore, whereas everything else, all the flow is in the U.S. And so there's dynamic shifts, if you were, in terms of liquidity provisions. And the last thing I'd say is that the infrastructure is quite different. So crypto, in a really cool way, has been developed by retail. It is now coming to institutional. Traditionally, in TradFi markets, it's the opposite. So we don't have all the systems and providers that we have in traditional finance in crypto. Now they're building that, and the banks are coming, and they're definitely going to adopt the technology. But I think we still have a couple years left where it's going to be really cool to build ourselves before the big banks come.
Mm-hmm. Yeah, I want to. It's a great lead into where we are in the market structure of crypto, because I think for it's very easy to forget how early we are. in the market structure of crypto. And mainly because our audience has been here for a while and they don't have issues uh, buying, selling. They don't have issues with liquidity. They don't have a mandate that says they can't buy certain assets. They're managing their own money and they do what they want. And I think that is framed a sort of an impatience in a lot of retail, whereas institutions, and particularly those who operate on quant trading basis, which, again, as you said, is like it's really using math and data and code and models to make trading decisions automatically, as opposed to what most of our audience does, which is fundamental based and discretional based trading. It's, using more narratives and vibes and, how you're feeling. So when we look at the current, give us an overview of the current market structure that you see within crypto, and like maybe paint the picture of like where we are in terms of the development of the market structure, because I think it shows how early we really are, and like what do institutions really need in order to start to be here in a big way.
Yeah. So it's a little bit boring, but I'll go fast. So they need regulation.
Mhm.
For the big institutions, they are under a lot of regulation, as you'd expect them. Like um, the regulation has been built over decades, and every time there's a problem, there's more regulation, and we've had some problems, right? So for them to be able to enter the space, they need to have a clear path to do so. Now, regulators are always sort of 1 to 3 years lagged. But what you're seeing now in the US presently is a change of regime, right? And so we're getting a lot of positive regulation come out. This is Crypto Week in the US. We have 3 bills that are being discussed. So I think we're getting there. Once the institutions feel as though the regulators are supportive, they're going to start investing money in building teams. The technology that crypto requires is so far advanced to what traditional finance institutions use. It's literally night and day. So if you wire money from your bank, it's using Swift. Swift was like 1957. It's like almost 100 years ago, right? Now we're using stablecoins, which is so cool. But the banks need to go and essentially change out the tech stack and rebuild a new tech stack. And that takes some time. I'll give you a very simple example. So if you're trading equities in a traditional finance institution, typically the number of digits you can have in the price gets capped at 5 to 7. If you're trading like a crypto asset, 5 to 7 is not going to do it, right? You need 30 plus. So these systems just aren't built to be able to capture crypto trading. And so you need to essentially rebuild that. And that's not a simple thing to do. So where are we in our journey? So there's been some very large institutions that have invested early. And I won't name names, but they're well-known institutions. And I think we're sort of in the second inning, if you want to use a baseball analogy. But it's accelerating, and I think it's you're seeing more and more folks get involved, and I think some of the capital markets activity we've had, I think, is speaking to that. And my biggest hope from all of this is that we get more traditional finance money entering the space, because that's going to support more of the founders and the people building cool tech.
And I like that you say the second inning, because everybody usually says the first or the last inning. So it's nice to get the perspective that we're no longer in the first inning. We've moved beyond that. But where are we? One thing that we've talked a lot about recently is we talked a lot about the crypto treasury narrative, right? All these public equities that are taking on this crypto treasury strategy, first popularized by Michael Saylor and MicroStrategy, or Strategy now. And now we're seeing it with ETH has really caught the media attention the past week, as there's been a whole bunch of ETH public companies doing this playbook. But now we're seeing it as well with there's many other tokens that are doing this playbook as well. And one thing that stands out to me is the reason that this playbook is very effective is that a lot of institutions have easier access to public markets and better liquidity than they do within crypto. Is Can you reaffirm, is that the case? How much how much new flows, new capital has will be able to come into the space as a result of these public companies having tokens on their treasury and using that playbook.
Yeah, yeah, happy to. I think you're spot on, and I think as I sort of mentioned before, we were pre-gaming. So I'm working with one of these treasury companies in Canada called 10x, and they're a basket. So it's fairly unique. They have four different tokens that they're going to stake. And the reason I thought this interesting is it gives traditional finance access to outside of the big four, but also staking yield. But to your point, there's two angles. There's one which is they can access it, so it acts as a conduit or a way for traditional finance capital to enter the space and get exposure. Almost as important, they can do it in a regulated way. So most of these institutions they have to pass know your client and anti-money laundering, which is called KYC AML. DeFi doesn't do that. DeFi doesn't. It's decentralized, right? We don't have that. There's been a couple of different protocols that have tried to build something around that, but nothing's really taken off in huge yet. This is a halfway house in my mind, allowing those folks to get comfortable with those requirements from regulation, but also get exposure. So I think there's healthy premiums. And the last thing I'd say is that you're seeing national champions as well. And the reason for national champions is that a lot of pension insurance, local capital, and say in Canada, they have a requirement to buy Canadian-based stocks. And so you're going to see this happen in Greece, in the UK, in the US, and Canada. And it's not that we're just doubling up. They're actually are going after money that's sort of captured. But I think, look, the long-term play here is that we're going to get more people involved in crypto, more people interested. They're going to buy these things and go, I wonder what's next. And hopefully that next step is they're going to come in and get involved in the space even more so.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. In traditional finance, whales use the Bloomberg terminal. In crypto, they use Definitive, the trading terminal built by Coinbase alumni, which lets you trade across every major chain out there. Definitive's combination of low fees and advanced order types like limit, stop loss, and take profit make it one of the best on-chain trading experiences there is. The kicker, Milk Road listeners trade free on their first 25,000 in volume. Visit milkroad.com/definitive and start trading like a pro today. It's interesting you bring up staking because that is so far, most of the crypto treasury companies have been Bitcoin, and Bitcoin doesn't offer staking. And so that concept is not something that's been discussed at a wide range. Also, only the ETFs in the US only recently, when a Solana ETF launched, was the first one with staking. There is ETP products around the world that do offer staking, so it's not completely new. But when you're talking to, how much do institutions understand this idea that you can get yield? And I don't even know if they use the word staking. My guess is they more just think about it from the perspective of yield because they're probably like, what the heck is staking, right?
Yeah,
So how much do they really understand and value that you can now have yield on this asset? Can they wrap their heads around that? And is there a similar asset that they can sort of tie that to that they would understand, or is this a totally new concept for them?
no, it's a good point. So I guess analogy in traditional finance would be structured products. And the structured product market is very big on gold, as an example. It's very large, and basically what you're doing then is you're building in derivative contracts where you're lending and borrowing, and there's different rates of yield. And so I think the majority of institutions look at it like this. Now, there's also counterparty risk, And staking doesn't come without its risks, right? Inherently, they can be hacked. There can be all kinds of different stuff that goes on. And so I think that's where people sort of need education and are looking to experts to manage it for them. So right now in the institutional world, there's a few champions, but the majority of folks are going in through funds of funds. And for the audience of funds is basically you go to a manager, you give them the money, and then they go pick other managers for you. So they're basically buying guides and paying for guides to go and help them find these folks. And so we did this in traditional hedge funds in the early 90s, and then everybody got more sophisticated, and we're definitely in that journey with crypto funds right now.
So we are early in this concept of structured products within crypto. And is it the case, are most institutions just never going to buy spot crypto? Like, is that how many, obviously for everybody that's been here, that's how we all have invested in it, right? We've all been buying on-chain tokens, right? Whatever, whether it be Bitcoin or Ethereum, or you go down the list, right? uh, will institutions buy in that way, or are they just going to buy these structured products? And then does that mean that what's going to happen is, you mentioned regulation earlier, so we're waiting for regulation, then once we get regulation, then we get the structured products, and then we will get more institutional flow? Like, the one thing we're always trying to understand is, like, when is the pipeline going to either grow the pipeline, or when is all of a sudden they're going to be the next big rush into the pipeline? And I think one thing is, let me actually get you to answer that question first, and I'll ask a follow up.
Yeah. So I think, from my perspective, if the regulation allows them to buy five more tokens, they're going to buy five more tokens. But a lot of the system is set up to distribute ETFs and to distribute mutual funds and fund products. So if you look at some of the large financial institutions, let's say your bank or your broker, they can't distribute a spot trade in their system. So it needs to be adapted. So I think we start with the ETFs and these traditional products, and then it slowly moves into as they build the tech stack I was discussing earlier. I do think that we will get tokenized products of TradFi, and that's going to blend the two. And I went all in a few years ago, right? So I love the technology. I think the space is awesome. I think people are awesome. I genuinely believe that some of the technology that we're working with in digital assets and crypto is far superior to TradFi. And so I think we take over their system. Now, again, that's going to take probably a decade, but I'd be very surprised in 10 years if it's not inverted. I think we go from being 10% to be 90%, and the technology is just too good.
Mm-hmm, mm-hmm. It's interesting because everybody has said that for so long. Like, that is not uh, a new thought, that crypto is better tech, blockchain is better tech, and better tech always wins, always, right? That is the story as old as time. The challenge is timing it is so difficult. And for so many people here, those listening to this show especially, we've been here for a while. And the there's certainly, I think right now there's renewed enthusiasm. I mean, price renews enthusiasm more than anything. And but definitely, there's still, retail is still not really here in this market, right? We are, as you said at the beginning of the show, really, it's the Bitcoin ETF that has been the biggest driver of this bull market so far. So when you step back, how do you see the next, few months, the next year playing out, in terms of, are we are things like the regulation and legislation that we're getting in the US, and this crypto week that's happening right now, and all of these, are we going to feel the impact of those soon, or do we still need to wait several years before we feel the impact?
So I think we already are. I think there's a few of the larger firms in the US deserve a lot of credit for pushing this and lobbying, and some great guys doing some work behind the scenes. Everything has a 3 to 6 month lag, and so I think it's not. an easy answer because it's opaque. But look, it can't be any worse than it was from a regulatory point of view. And so we're now like it's literally 180. And I think the U.S. is definitely leading the charge and moving forward. You have MiCA in Europe, which is also providing a rule set. I'm based in Dubai. The UAE has been very forward thinking and positive. So I would take solace in all of this is a win behind your sails. In terms of the institutional adoption, it's also happening. That's another win behind your sails. You got like two wins. And then the key is just to be like keep an eye on macro because there is a lot going on in that space and we are seeing the effect of it on the book. The last thing that we're very focused on internally is how is crypto market structure maturing? And as you see the maturity of the market, what does that mean for volatility, for price action, for liquidity? And I think if you think about those three barometers, if you see them change, let's say you're mapping out Bitcoin vol and it's at a multi-year low, and all of a sudden it starts to change, you should pay attention. I don't know what that means. I don't think anybody does, but it means something because something's changing. And so I think like keeping an eye on that, especially as we come out of the summer, could be a very interesting time to do some investigative work.
It's always an interesting time to do investigative work in crypto because 24/7 markets is it's exhausting sometimes. It's obviously a much better infrastructure versus what we have right now. That's for sure, no doubt, to have global access 24/7 markets, but crypto never sleeps, and sometimes neither do we. So that makes it both fun and tiring at the same time. Uh, when you step back. Uh, how do you feel right now about the rest of the summer? Do you think that, and I know these are difficult questions to answer, but do you think that uh, are we set up for a rally? A lot of people right now are, hey, there is, I mean, we got comments right now coming in the show, altcoin season is imminent. Here we go. We're about to pump, which is natural when we have these big pumps and everything is green. Um, I'm still a little cautiously optimistic in the short term, right? It feels like, hey, a lot of the things that we're talking about are not necessarily now things. We're headed in the right direction. There's a lot of tailwinds, as you said. How do you frame July, August, the next few months?
Yeah, so I guess being a quant fund, we defer to our algorithms, as it were. That said, summer traditionally is a little bit more boring, right? People are on holiday, there's better things to do than sit, you look at your screen all day. But and this is not crypto. This is also traditional finance markets. Because a lot of the decision makers are away and not paying attention. Sometimes you can get awesome price moves because there's not as much liquidity. And you're going back to that concept of liquidity. And so if you have less liquidity, a move can really go parabolic quite quickly. So I think it's definitely going to be an interesting summer given the moves we're having currently. But I think really to your point, we'll see come September, October, what really gets into gear as sort of everybody goes get back to work and gets going type thing.
Yeah, I like that perspective that it's a summer of opportunity, but that it doesn't mean that the old adage of sell in May and go away is different this year. The same people that take vacation every summer are still taking vacation this summer and still taking time away from their screen. I want to touch on AI quickly before we let you go, Michael. How is AI impacting you as a quant trading firm?
Yeah, so I think it's great technology. I've been working with artificial intelligence through most of my career to date. And, we're on this next gen, right, of it, and I think LLMs are awesome pattern recognition tool. So, personally, I use it every day. I find it as almost becomes a pseudo like I'm literally walking around with a library next to me, right? It's an awesome resource to be able to use, and I find it also very helpful to structure plans. So for anybody that's sort of looking to that side of it, I'm a big fan. In terms of the actual research perspective, we find it does a great job to give you sort of a base thesis. So let's say that we come up with an idea and we want to test the idea. We can very quickly ask an LLM to do it for us. It's probably going to get us to like 80% of what we want, but it's enough for us to say like, that's a throwaway idea, nothing there, or actually something could be interesting. Now, back in the day, it would probably take us 2 days to do that by hand or manually computing. So what it's allowed us to do is cycle through a lot more ideas quicker. But it's still it's a tool, right? It's not a be all end all. And I think the other thing I would say is that I've noticed a lot of folks, really, especially dyslexic people, myself being one, tend to do very well asking LLMs questions because these sort of are typing out in longer term. If you don't use the LLMs and treat it as though you would a very simplistic tool, I think people fail to get all they can get out of it. So I always encourage our team to really think of it as though they're an intern on your desk or your team and talk to it as you talk to an intern. And if you do that, it's going to get great results. If you start treating it as like your peer, you're not going to get the same stuff. You have to get context and get it out.
Yeah, I completely agree. It is a fantastic intern, but you can get into a dangerous state if you start to give it too much responsibility and too much authority and trust it too much. I mean, Sam Altman says all the time that he doesn't trust ChatGPT, his own product, right? It's like the best reminder that it's not where a lot of us consider it to be quite yet. Michael, absolute pleasure to get you on the show today. Thank you so much for joining us and breaking it all down. I think Bitcoin all-time highs is pretty exciting right now, and hopefully we'll see where we go from here. But I think the summer will be full of opportunities, as you said, and then I feel like the fall is when we'll really, really see the markets turn into something bigger. Although I think throughout the summer, these public companies, these treasury strategies could really continue to be the main narrative and capture a lot of capital into particularly the leading tokens. So I think we could see some continued pump there.
Yeah, awesome to talk to you. Thanks for having me.
Thanks so much for listening in, everybody. I have to remind you, as always, that none of today's show is investment advice. I am not your financial advisor. Michael is not your financial advisor. You should always do your own research and think before you make investments. If you need any help with your investing in crypto, you should subscribe to the Milk Road Daily newsletter. It hits your inbox every day and gives you the download of what you need in that day. And if you want to go the next level, you should go pro and sign up for Milk Road Pro, because that'll give you our exact portfolio that we are following, trading, and tracking right now. Thanks so much for listening in, everybody. Have yourself a wicked awesome day. We'll see you back. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.